Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. We made it to the end of the week. We got the long weekend ahead. So what do we got going on today? Well, the day before the 4th of July weekend's typically slow volume. The market's down a little, Dow down about 100, NASDAQ down about 50. Wouldn't be surprised if they try to push it up into the end of the day. And who knows, maybe we even finish positive for today. But next week is where it starts to get interesting. You see, we've come to the end of the quarter, right? The quarter ended. Now, I thought there'd be a rally up into the end of the quarter, and there was a little rally, but it wasn't anything major. It was a failed rally, and they couldn't push it higher. So we got the new quarter starting now. Now, we're in a recession, in my opinion. We've had a negative print the first quarter of the recession. We're down 1.8% on the GDP. And I believe that we're going to get a negative print for the second quarter, and that's 2 quarters in a row, which by definition we're in a recession. Okay, we'll see if that happens. That's my prediction. That's what I'm playing for. But this market is kind of flat today, and I'm still expecting more of a pullback in the market. Now, I expect it to pull back before we get a major short covering rally. Look, we could easily pull back to the 50-week moving averages on the S&P and the NASDAQ. And when we pull back and touch those 200-week moving averages, that's where we're going to get that short covering rally, in my opinion. Now, this is the worst start to the stock market in 52 years, right? We're down about 22% on the S&P, down about 30% on the NASDAQ. And we haven't had numbers like that. You have to go back into the 70s, like 1972 or something. But anyways, what happened in 1972 when we were down that much, that year actually finished higher. So I do believe they're going to push this market back up. That's my opinion. A lot of people think we're going to have a crash from here. And it takes two sides to make a market. Otherwise, it wouldn't have anyone to trade with. You got to have traders on both sides of the market, and that's where the price is discovered. Okay, so I think the Federal Reserve, maybe they raise one more time here in July, and then I think they're done. They're at 1.5% right now, right? Now, there's no way they're going to get up to 2.5%. It's just not, that would be the breaking point. Maybe they get up to the 2.5%, but that's where everything starts to break. That's where the stock market breaks. That's where the housing market breaks. And there's absolutely no way I see 3% before they reverse course. And I actually believe that they will not only reverse course, I believe they will take interest rates negative. That's right. Not real interest rates negative, but the nominal interest rate will go below 0% once they introduce digital coin. That's my prediction. That's what they have to do first to take the money negative. Okay, so that means if you have money in savings, they're actually going to be confiscating it. I think that they're going to reverse to that point once they see everything crash, because they're going to raise it up until we get, well, a recession or a depression, and then they're going to go, oh my God, what do we do? And at that point, they're going to bring it back down to zero. Again, that's my opinion. We'll see how that plays out. But they're going to break things. They're going to break the stock market. They're going to break the real estate market. Now, let's talk about the real estate market. Now, I think there's going to be a housing market reset, for lack of a better choice of words. I think the Federal Reserve is responsible for this fake housing market we have now. Now, this market's fake. It's fake. It's by artificially low interest rates held at 0% for 12 years. It's fake because of the printing of money. I mean, just 12 trillion in the last 3 years. This basically holds interest rates just flat and sends the stock market up higher. But that's fake. It's fake. It's not real. There's no market discovery. If you let the free market work, let interest rates go where they should be, and let the housing prices go where they should be, I do feel that it's going to come down 50%. Now, a lot of people tell me, Mike, you don't know what you're talking about. It's going to be different this time, and maybe it will be. That's their opinion. I have a different opinion. Now, what I'm seeing right now in the marketplace is two sets of sellers, right? There's two types of sellers. Now, there's sellers that are starting to panic sale. Now, we talked last time about how a lot of cities are already having 50% price reductions of listings. So the listing prices here, and 50% of them have started to reduce the prices. Not dropping at 50%, they're dropping at 10 and 20%. But at 50% of the people that listed their home, they're already having these price reductions, right? So it's kind of a panic seller. That's the first type of seller. And the second type of seller is the seller that's still ignorant. They think they can still get the price that Billy Bob down the street gets. Now, I'll tell you about a little listing presentation I had here. I went on a listing presentation that I tried to get. Now, the house, maybe on a good day, we could get $5 million for it. Now, that's a luxury home in my area, and it would be about $5 million. But, of course, the seller wants $6 million for it, okay? So we're about $1 million apart. Now, and he didn't like my opinion of $5 million. So he thinks he can get $6 million, and he went with a different agent. He sent me an email and explained the agent's plan for him. Now, this agent had the plan that, well, you want $6 million out of it. Well, here's what you got to do. He's talking into doing major renovation to the tune of $500,000. $500,000 to renovate this luxury home, okay? And then they're going to list it at $6.5 million. So this way he's going to net out $6 million. So he's going to spend $500,000, and it's going to take 4 or 5 months to renovate it. And then they're going to list it at $6.5 million. Now, I think this is terrible advice, but that's how different real estate agents think. That real estate agent thinks it's going to go for 6.5 after they put $500,000 into it. Now, maybe he's correct. Maybe it'll play out that way. Here's the way I see it playing out. First of all, in this time of supply shortages, it's really hard to get work done. So maybe that 4 months takes maybe 6 or 8 months, and you're out till next year. And that $500,000, maybe it takes $600,000 or $700,000 because the costs are raising up. But this seller, he's kind of doesn't understand that the market has already shifted. He is stuck on getting $6 million out of this property. Now, he paid $1.5 million, so of course he wants $6 million because that's what Billy Bob down the street got. But he's got to put $500,000 into it. I think it's a terrible plan. I think he's going to lose his $500,000, and I think he will be selling below the $5 million that I could get him right now. So not only is he going to lose his $500,000, I think he's going to lose another $500,000. This is just my opinion. Maybe he's a lot smarter than me. That's possible. That's possible. A lot of people are a lot smarter than me, but everybody tells me this time is different. They say, but Mike, this time it's different. They can print money. The corporations can buy the houses. There's no inventory, Mike. You don't understand. You got to do your research, Mike. You got to do your research. It's different this time. I don't think it's different this time. People are already having these price cuts, and the sellers are starting to go into panic mode, and they're soon going to go into liquidation mode. Look at the inventory is actually exploding onto the marketplace. Now, the national numbers will tell you we're up 20% in inventory year over year, but that's not the real picture, because we just had this spike up in interest rates from 3% to 6%. So the inventory is just spiking in the last 2 months. In the last 2 months, cities like Austin, Texas, Seattle, Washington, Salt Lake City, Boise, Idaho, Phoenix, Arizona, cities like these have had 150% increase in their inventory just in the last 2 months. Inventory is spiking up onto the marketplace. Now, where's this inventory coming from? Well, to be honest, I really don't know. Mostly, I think it's panic selling. But this inventory can come from anywhere. There's a record number of new homes coming onto the market. There's a record number of evictions that are going to be happening, foreclosures that are going to be happening. Investors, they want out of the market. They want to dump their Airbnb properties because they're not making the money that they used to make, and they're becoming a big headache for them because they're sitting vacant. And that brings me up to the point of vacant properties. There's 15 million vacant properties in the U.S. right now. Okay, you got vacation homes. A lot of people that have 2 homes are going to be selling one of these homes. And what a lot of people are not talking about is retirement homes. Baby boomers are starting to move into retirement homes in record numbers. numbers. The baby boomers are getting older. I'm clearly a baby boomer, but I'm on the younger side of the baby boomers. So the older baby boomers are starting to sell their big McMansions and move into the retirement homes. And they need to sell their house to get the money to move into these retirement homes. A lot of these retirement homes are not cheap. A lot of these retirement homes have buy-ins, $250,000, $500,000 just to buy into a retirement home. So a lot of that inventory is coming onto the marketplace. The inventory is starting to explode higher. And now we're seeing 50% of listings have price cuts already in many cities, right? Okay, but these price cuts are not enough yet because the market tells us that these homes are not selling. The inventory keeps going higher. So these price cuts have to start becoming more and more aggressive. That's just the way it works. They have to get more aggressive with these price cuts to get their home sold. Look, they cannot get Billy Bob's money anymore. They got to lower the price, and they got to keep lowering the price and keep lowering the price until it hits a market order. It's a capitulation. A capitulation will happen. Now, when I talk about a crash, 50%, a lot of people would agree that's a crash. Now, in the stock market, you can crash 50% overnight. We could wake up on Tuesday after the 4th of July weekend and be down 50%. It can happen that fast. In the real estate market, it does not happen that fast. I'm not saying we're going to wake up on Tuesday and we're going to get that crash. It doesn't work that way. These ignorant sellers, they have to come to their senses, and they have to go from an ignorant seller to a panic seller, so we get that capitulation. And that plays out over time. It plays out over years. Now look at the last one. The last crash, which I call a crash, was 2008, right? Okay, 2008, the peak was in 2008. Where was the trough at? The trough didn't happen until 2012. Took 4 years. Now, I think this crash will be faster. So maybe from peak to trough this time is going to take about 2 years. Now, once again, you've got your own opinion, and I know your area could never come down like this. Your area could never have a half-off sale. Your area could never crash. I get all that. Real estate is very localized. And if your area stays up, I think that's great. But my opinion is that the whole country, actually the whole world, is going to have this crash because of the big bubble. This is not unique to the U.S. No, it's not. I mean, there are countries that are much worse than the U.S. with their house prices. Australia being one, Canada being another. China, they're having big problems over there. The crash is coming, and I'm telling you, it's going to be worldwide. It's not just the U.S., but it's going to happen here, and it's going to happen here on a major scale. Now, I don't mean to scare you right before the 4th of July weekend, but if you like this rant, give me the thumbs up. Why not? We're going into the long weekend, and this way, if you hit the subscribe button, we can talk next week. The markets are going to be back open on Tuesday. Maybe I'll get a video out on Monday, but I don't know if I got a little time. I like talking to you guys. I can't go 3 or 4 days without talking to you. I don't know whether there's something wrong with me. All right, get out there. Have a great 4th of July, everybody, and we'll talk again real soon. Bye-bye now.